Market Outlook Calendar Week. 12-week 11 unfolded under geopolitical stress that did not stay in headlines but translated into real costs. The conflict involving Iran, the United States, and Israel shifted visibly toward energy and transport. Reports of strikes and counterstrikes near key Iranian export infrastructure, combined with a tense security situation around the Strait of Hormuz, led to route avoidance, schedule adjustments, and a repricing of risk premia. At the same time, authorities and companies reported outages and curtailments affecting regional oil and gas operations. The International Energy Agency responded with an unusually large emergency release from reserves. As a result, energy price pressure increased, and with it the pressure on inflation and rate narratives. This mix showed up in digital assets as classic risk compression. Liquidity moved into the core while breadth stayed thin. Altcoin moves became more dominated by microstructure and flows, while Bitcoin acted as the lead contract setting the market's beta. In derivatives, positioning shifted quickly, including phases of negative funding followed by repricing as headlines stacked up. That pattern is typical for an environment where direction does not come from trend, but from events that move the USD and the yield curve. This is where the two markers framing the transition into week 12 come in. Bitcoin dominance sits at 58.83%, higher than the prior week. The Fear and Greed Index is at 12, still in extreme fear. Taken together, this points to a clear capital preference for the core segment and a defensive posture across the broader market. This is not a forecast, but a snapshot of the current risk budget. Against that backdrop, Quantum Data Analytics did not publish research signals in week 11. This was an operational decision. The research stack was retuned on the filter layer and AI components were retrained. At the same time, the market regime was strongly event-driven. Discrete news impulses often override the endogenous market data the models typically evaluate. In that environment, the risk of regime errors rises. Signal output therefore remained paused until filters and regime classification are stable. Week 12 Outlook. The calendar concentrates several event windows that can directly move rates and the US dollar, and therefore the price elasticity of BTC, ETH, and AltBeta. Early in the week, the focus is on US industrial context. The following day, attention shifts to sentiment data out of Germany. The central block comes midweek with the US Central Bank, including projections and a press conference. Immediately after that, a second cluster follows with Japan, the United Kingdom, and Switzerland. For crypto markets, the key transmission remains how quickly energy-driven stress feeds into the dollar and into real yields. If the USD behaves as the safety valve, pressure rises on AltBeta, while Bitcoin tends to hold up more as the liquidity center. In parallel, ETF flows can act as a short-term liquidity impulse. Combined with the geopolitical backdrop in the Gulf, these windows function as volatility nodes. As long as Hormuz remains a choke point and the energy axis stays politically exposed, yields, FX, and risk premia will react more sensitively to fresh headlines. That creates a setup where slippage does not only come from scheduled data releases, but also from unscheduled headlines outside typical macro hours. Operationally, 3 points stand out. First, the time windows around major central bank events are zones of elevated slippage because liquidity can thin out and spreads can widen. Second, high headline density increases the reaction speed of derivatives markets, making funding divergences and liquidation chains more relevant. Third, structural risk remains elevated in segments where order books are thin or supply events dominate flow. The core market remains relatively more stable because depth and settlement capacity are higher. Until the research filters are stabilized, the development of new research signals remains cautious. The focus is on data quality, regime clarity, and a clean separation of event shocks from endogenous market structure. Notice, this content is for information and research purposes only. No investment advice, no buy or sell recommendation. Quantum Data Analytics. analytical, strategic, innovative.